Damani's signature show, Wizards of Dalal Street, is back, and the focus of this series is to feature some of the finest young investors who are likely to make a mark in investments in years to come. He caught up with Hiren Ved of Alchemy Capital. Here's a slice of that conversation.
I think over the years, one has realized the importance of quality and scale. I think these two things were critically important. Obviously, growth is the most important in that equation, but the quality of earnings and scale is equally important. So, for example, a few years ago, Maruti had a big drop in their stock price because they started the Gujarat plant. Absolutely. And, it was a great company. But there were circumstances which led to a 20%, 25% drop in the price. And, those are the times, I mean, probably in my early years in your career, I wouldn't even have thought about that. But, one learns that, great companies during difficult times can be the best bets. Can be the best bets. And, it's not too far behind, and the stock is already up 4x, 5x from where it is. So I think over time, you look for scale, maturity, and sustainability. And I think those are the things that we've incorporated into our philosophy.
Hiren, you talked about scale and sustainability. I know one stock pick that you're particularly proud about was Bajaj Capital. How did you get into that stock? Bajaj Finance, I'm sorry.
Yeah, I mean, Rameshji, after the global financial crisis, we realized that, the world is not a safe place. I mean, we don't know what's going to happen.
Commodities were dropping, oil was dropping.
Exactly. I mean, we were not sure about global growth. But one thing that we were quite confident about was domestic growth and domestic consumption. So we looked at a lot of ideas in domestic consumption. So, we looked at Bata, we looked at the likes of TTK Prestige.
Typical consumption stock.
Exactly. But at the same time, we also thought that, the Indian consumer has come of age. He wants to buy everything today. I mean, he's not going to, there were times when you bought a new house and then said, this Diwali we'll buy a TV, the next Diwali we'll buy a fridge. That's no longer the case, right? I mean, you want to fill up your house on the same day. And then came along Bajaj Finance because they were one of the early players in the consumer finance business.
There were other people too at that time. What made them so distinguished?
I think there were other people, but I think what was unique about Bajaj Finance was the way they went about doing their business. I mean, it's not that other banks or financials did not try to capture the consumer finance market, but I think they went for scale. They cut interest rates to get customers, and they hired third-party people to originate their customers. What Bajaj Finance did unique was that they had their own person sitting in the consumer store, assessing whether you were eligible for a loan or not. And that was the big difference, which is that they wanted to own their customer.
Hiren, we talk about these great principles of investing, but here's what troubles me. It used to be that when we taught economics in college, economics is about scarcity. Suddenly we got abundance of everything, from monetary supply to all you can watch movies for $11, all you can hear music for $5, to interest rates, which were always positive since millennium, since the time of Christ. Now they're going negative. What are the investment implications for this? Does investment attitudes change because of this?
Rameshji, I mean, you're right. I mean, in the sense that we are in uncharted territory. We've never seen, at least we've never seen negative interest rates, so much of QE, liquidity. And sometimes you wonder, is it different this time? And
is it?
Well, no. I mean, I think, the investing greats have told you that the basic principles of investing will never change. The context will change, but the principles remain the same. So cash flow is still important. Return on capital is important. Capital allocation is important.
Margin of safety.
Margin of safety is important. So I think that, while we are in a global macro context that is so different from what we've seen in the past, I don't think that the fundamentals of investing ever change. It's like the Bhagavad Gita, right? It's eternal. The principles are eternal. The context changes, but the principles don't.
Okay, what a fantastic pick.